All right, you've probably heard the headlines. President Trump is floating the idea of a 50-year mortgage. And what is that going to do for buyers, and how are they going to take advantage of this or not here in Metro Atlanta? My name is Rachel Mooney, and I sell real estate here in North Metro Atlanta. And we're going to break down the pros and cons to what it would be like if you do have a 50-year mortgage. All right, so what's actually on the table? President Trump is floating the idea of bringing in a 50-year mortgage, possibly through Freddie Mac or Fannie Mae. And what this would do would actually lower monthly payments for a buyer that's getting a 50-year mortgage. Right now, most mortgages are capped on a 30-year, and so there would be a really big policy shift that would have to happen in order to make a 50-year mortgage even a possibility. So the goal to this would actually be to make housing more affordable, right? For the first-time home buyer that is very cautious of what their monthly payment would be, going to a 50-year mortgage would actually lower monthly payments for someone that actually took on a 50-year mortgage versus a 30-year or even a 15-year mortgage. But there's a catch. Under current lending laws, anything longer than a 30-year does not qualify as a qualified mortgage. That means government-backed lending can't actually buy those loans without a rule change. So this isn't a done deal yet. It's an idea that's still being floated. So let's look at what everybody would be talking about and how that makes a difference. So let's just take a $600,000 house at a 30-year mortgage at a 6% interest rate, and we're going to compare that to what a $600,000 mortgage would be for 50 years at a 6% interest rate. So a $600,000 loan at a 30-year mortgage for 6% is roughly about $3,537 a month. That's just principal and interest. That doesn't include homeowners insurance or taxes, anything like that. And on a 50-year mortgage, it would be about $3,158. So we're almost at a $450 a month spread between a 30-year and a 50-year mortgage. So yes, that's actually kind of nice, especially for someone that is buying their first house. $450 a month, it could be very enticing, and that could be the difference of actually affording the house or not affording the house. But let's just look at it over the lifetime of the loan. A 30-year mortgage at a 6% interest rate is going to cost somebody roughly $695,000. That means if they paid that mortgage every single month for the next 30 years, to have that money, they're going to be paying an additional $695,000 in interest. Versus a 50-year mortgage, they're going to be paying almost $1.3 million in interest. That would be if they actually lived in the house for 50 years and paid that note year over year. Now, I can tell you this, most first-time home buyers and most buyers of a house in general only tend to live there 3, 7 years, sometimes 10 or 15. But it is rare these days for someone to live in a house for 30 or 50 years. Much different than our parents, my parents and parents that I know have bought homes and sat there years and years and years and paid off those mortgages. And so that is rare these days. Now I know I'm probably going to ruffle some feathers when I say that, but the reality is that people are always upgrading and moving and changing. Their businesses change, their locations change. And so the odds of someone staying in a 50-year mortgage is probably going to be pretty slim. So let's just talk about the trade-offs, right? If you do a 30-year versus a 50-year, what are we looking at? Well, with a 50-year term, you build equity very slowly, right? You're not going to build as much equity in the home as you would if you were doing it in a 30-year or 15-year mortgage. And so let's just say you have the house for 10 years. At a 10-year point, you would, at a $600,000 loan, you would still owe about $575,000 versus if you took a 30-year loan out, you're only going to owe about $500,000. So the equity that you get from a 50-year mortgage is going to be a lot slower than it would be if you were doing a 30-year. So that means that you're going to take a lot longer to pay off your loan, which means if you're only staying in the house 5 or 10 years, you're not going to have as much equity built in as you would have if you would have done a 30-year mortgage or even a 15-year mortgage. And let's just talk about another impact that people really aren't talking about, and that would be it changes the affordability. Well, when that changes, the market has an impact. If everyone can suddenly afford a little bit more, it could actually push prices up. And so that's the problem that we have in this housing market, is that pricing already is too high and affordable housing really is non-existent. Meaning if you're a first-time home buyer, you're probably looking at about $400,000 to $450,000 mortgage for a first mortgage, and that's here in Metro Atlanta. I remember when I bought my first house back in 1999, it was $68,000, and then my second house was only $175,000. Well, if you're going to go try to find a house today for $175,000, it's probably going to be something that you don't really want to live in, right? It's going to be a tear down. It's going to need a lot of work. It's probably not going to be in the best location. And so affordability is a real issue that we are having in this housing market. All right, so let's just talk again about some of the pros, right? So for a young buyer starting out, the lower payment could make a difference between qualifying or not qualifying. Investors holding property long term, that cash flow benefit can be very appealing for an investor. And if paired with other creative tools like assumable or portable loans, it could actually soften the edge a little bit. So there are some positives for that, but most homeowners, the real issue isn't the payment size, it's the inventory. And so that again is a huge problem for us, right? We don't have a lot of affordable housing, especially here in Metro Atlanta. So it could actually probably be more of an impact, not a positive impact for us if we do that 50-year mortgage option. But again, there's a lot of hurdles that have to happen. Policy has to change in order for this to even be a possibility. So expanding mortgage terms is a short-term fix for a long-term problem. It doesn't create new homes, it stretches out the payment monthly. So we here are obviously having a problem, just like we're having across the United States, is affordable housing. So if you're thinking that this might be a possibility and you're wanting to run numbers that like, hey, if President Trump does pass this at a 50-year mortgage, what am I looking at? Reach out to me. I'd love to be able to help you walk through that process. Does it make sense or not make sense for you to purchase a home with a 50-year mortgage? And then of course, I'd love to know what your thoughts are. Of course, throw me a comment in there. Make sure you hit that bell button, share this video as well. I look forward to seeing you next time.